Hey everybody, we're back at it with Scott. My name's Andy. Channel's Finding Value Finance. I've got Scott from Twitter. It's at U_AG_. I got to remember that now. So thanks for coming on, Scott. Really appreciate it.
Thanks for having me, Andy.
We're going to hit up uranium and what we think is going on in uranium. I know a lot of people want updates. They want us to talk about companies, what we think about the companies. Again, this is not financial advice. Do your own due diligence. It's just our opinions. We both have similar opinions and we differ a little bit, which is good. So you get a little bit different background and different companies and different areas. He's in Australia. I'm in America. So we have a little bit different views on some of the companies and research different companies. Yep. So looking at spot price, looking at some of these charts, Scott, where do you think we're at?
Oh, they look absolutely ridiculous. So I might just start sharing my chart with you.
Because I think they look ridiculous too. I think we're close.
Oh, I think we're so close to some of these things. Right.
Oh, you're starting with the Bannerman? Oh, you're going.
No, I'll start with the the Sprott physical uranium trust. Like, I mean, this is looking incredible right now. So what I think we're doing is, if I just put that to normal chart, just go weekly. Like, here's the line that I see, which is major resistance, right? So we've hit it here, hit it all the way throughout here, hit it here, and then we've come just short of it previously, but now we literally try to smash through this resistance. And it's really evident when you see it on the daily chart, which is this. And on daily chart, what we're doing here also is we're kind of squeezing up. So I feel like we're squeezing up on a daily chart. It looks mega on a monthly chart. And Andy, you showed me this before, which is really good looking fat green candles right here on a monthly chart. So yeah, I think it's anytime now, any day right now. And on top of that, you've got the bullish news just around URNM. So Sprott, overtaking URNM just, I think, yesterday. So that's mega bullish, I think. So if you look at all these uranium charts, like URNM, like they look so good. They look so good.
You had the volume up too, and that volume was just getting massive on your on the spot one. The U.UN. The volumes, look at the volumes just kick up, and that's where I'm like.
And you've got like, that's right. And you've got like Goldman Sachs jumping on this now. Like, it's becoming like your mainstream bank play. And you've got all this. Ready. Yeah, this is so ready, and you've got all these ESG money like ready to pile onto this as soon as they've got enough liquidity, daily trading volume. Yeah, you've just got everything lined up right now. And I think I saw a post which I retweeted the other day by Quakes, which basically says, like, we're in an 80 million pound deficit right now. Mm-hmm. Like, 200 million pounds is your annual demand, and we're in 80 million deficit. And I questioned him because we know that Sprott has been buying up, Sprott Uranium Physical Trust has been buying up around 1 million pound per month. Per week. Yeah, and you annualize that, and that's like, and that's like over 50 million pounds. So annual deficit right now, if you include Sprott, is 130 million pounds.
And when you zoom in on the right hand side there, are we peeking out? We're doing a little turtle head, is what I like to call it. It's peeking its head out, seeing what's up. I think it is. I think it's peeking right up above.
I think we are.
Look at that. It's like,
it is peaking. Look at that.
Come on, just close up there on the. We need to close up there a couple days to show us we've got the strength.
So yeah, you could see something like this, break out and then come back and retest and then go, or we could just go, right? Yeah. Like, it doesn't need to back test. So yeah, I mean, this is not the time to be trading in and out. Like, this is where I just sit tight and go, wait for it. It's coming.
Well, I'm not even doing that. I'm like trying to still buy stuff. I'm like, get it in there.
Yeah, which is exactly what I did today. Like, I sold some of my silver this week, and I was like, I need to get Bannerman. I think I've been tweeting. I think I've said it on your channel when we were talking about ELA. I said next week I'm going to buy Bannerman. I did just today. My order got filled. Super happy. I think, yeah, I'll show you Bannerman chart. We always talk about, Andy, how the charts are starting points. But if you look at Bannerman, and the first chart that I go to is the monthly chart. And this, I think, is probably the best looking uranium chart out there, just in my opinion. So you see, if you draw a line here, you see resistance, like a mini support, resistance, and now support. Like this is where you buy, right? You break out, back test. I'm looking at this chart going, I need to get some Bannerman. And I mean, I always wanted Bannerman, but it just didn't have enough cash for me because obviously it's a pretty large market cap, and you know they probably do need a bit of money to go through their development phase. And you know, I was kind of wondering, okay, are they going to start diluting soon? And I think they only had 20 million cash or something like that. So I wanted to see a little bit higher cash position. And you know, the recent placement, I think they raised like $45 million during the recent placement, gave me not only the opportunity of buying into a company with high cash position, but also the share prices dropped because of the raise at 22 cents. So yeah, just every chart wise, it looks absolutely fantastic. So you've got the perfect, like one of the most perfect looking Livermore cylinder right here. You just draw it up. You've got the bullish cylinder happening. You're pretty much right at the bottom. And if you're closing into like an hourly chart, like you can see it's now kind of wanting to break out of this. So I'm just like, this is it. And I don't know if you want to go into the details of Bannerman, why we like it so much, Andy. You like, obviously Bannerman is one of the larger holdings for you as well in the uranium space. So do you want to just talk about Bannerman and why we like Bannerman?
Well, I like Bannerman the most because when I was buying it in September of 2020, back where it was like dragging along, way before that. Yeah, right. It was right in there. I was buying it like in there. The reason I really liked it was everyone in the uranium sector said that they couldn't raise the money. They couldn't raise the money. It's a high cost. You know, it takes a lot of money to get this thing started. They're going to dilute shares. They're going to do this, X, Y, Z. And I said, I am buying this for 19 cents a pound in the ground. And I wasn't necessarily thinking that they were going to buy it. I was thinking, well, what if they get bought out at say 20 or 30 or 40 or 50 or 60 or $70 a pound, and I'm paying 19 cents a pound for it? I'm like, load up, why not? So what the funny thing is my broker at the time, they didn't charge any money for buying this. It was free and I could do it, but they limited how much I could buy at one time. I could only buy 9,999 shares at a time, which was like $200 and something worth. So I was like 9999 enter, 9999 enter. So I was just doing all these transactions to fill up the account or portfolio with it. So that's my story with that one, and Bannerman. And at the time I was a contrarian within the contrarians, and I thought they had good assets. Like I don't think they're bad. Awesome. They're not bad. Yeah, and they're right where really China. Awesome. They're right where China wants to buy everything. So that's right. That's exactly right. So yeah, so the reason why I like Bannerman so much, even at these prices, is just because of the leverage that you get. Because obviously it's a high cost producer with lots of pounds in the ground. So if you just look at the last run up, like it gave you from the lows of this run here to the highs, it gave you 3.5x, 250%. Whereas if you look at a lot of other uranium plays, it's nowhere near that. So if you want to give me any name that you want to give, like even maybe Deep Yellow, which is considered like their. I was gonna say Encore Energy to see if that. Yeah. Okay. Let's do Encore Energy, but you know, Deep Yellow is probably their competitor. Like should you say? No, it's pretty similar, but it only did 123% gains from this low to here. So the leverage that you get with BMN, just looking at the chart, is incredible.
Let's do Encore Energy.
Encore Energy is a good one.
Okay, so this might have done pretty good. Let's see what they've done. Yeah, so if you look at Encore Energy, the chart looks really good, but it only did 125. So Bannerman has the leverage. Like I was looking at year late must have done more. I was thinking.
I'll give you one that's got some good leverage. I've got one that you can try next.
Elevate only did 200.
Try ISO Energy, ISENF, or ISO, either one. It's ISENF. There's no O, but ISO Energy. You could do ISO right there. Yep. Try that one.
Let's try. Yeah, still Bannerman beat it. 217%.
I tried.
So I feel like you just get so much leverage. And what are we paying for Bannerman right now? So Bannerman's market cap is like 270 million right now at these prices at 22 cents or something like that. They've got 270 million pounds of uranium in the ground. That's a lot. You're paying $1, like excluding cash. Like if you do EV calculation, which is enterprise value, so basically your market capitalization minus your cash holdings, it's even less than that. So for me, I'm getting uranium for $1 a pound in the ground. But here's the kicker, right? Because everyone's talking about, oh, are they gonna? How about if they start producing and they, the cost goes up to $100? I don't really care because with Bannerman, okay, there are several things that really attracted me to Bannerman over the rest. It's first of all, charts. Second of all, I think we briefly touched on this previously, but it's the memeability as well as the CEO's presence. So Brendan Monroe, like he's just so knowledgeable about the sector, and I've actually learned a lot just watching his presentation on the flywheel effect of Sprott and what it's going to do to the markets. He clearly understands how high uranium prices will go. And he keeps saying that he's not going to start negotiating anytime soon. He said every interview watched with Brendan Monroe, he keeps saying, I'm just going to wait until the utilities start panicking and start piling in, basically is what he says.
Yep.
He understands. Like, you don't want to, and we've talked about this before, Andy. We don't want need-term producers, right?
Right. We want somebody to sit on their hands. So when other people start negotiating contracts at the beginning of the bull market, we don't want to be in those companies. We want to be the ones that like they're blocked from going in at a low price, and then it just goes vertical and they're just sitting there like, oh, now we'll negotiate, last one to the table. And I think he actually said that, something on the lines of that. Brandon.
No, Brendan keeps saying like he's not gonna be negotiating anytime soon. So he basically says he's just gonna let them know that we're here, like Bannerman's there, and not do anything, and just wait until everyone starts panicking, starts piling in for supply. So I think he's just got that right. So what I don't want in any of my miners is people negotiating too early and getting lowballed on their uranium prices, and the prospect of Bannerman getting bought out by China is huge, in my opinion. So if you look at, I don't know if you looked at, so this is Elevate site, but if you look at the map, I think you find the map here. Okay, so this is the map of all the African assets right now. So Elevate, all these ones are marked Elevate, right? But what you see is Bannerman's here. So it's Bannerman's here, right? Your Tango 8 project is here. And DYL, I don't think I see it here, but what's important is this, HUSAB. Like for those of you who don't know what HUSAB mine is, it's basically a resource company it's a mine that's been run by Extract Resources back in the 2000s up to 2011 or 2012 until they got taken over by China. So okay, let me just Google this because I think Extract Resources China board. Let's just type that in. So Extracted Resources in March 2012 was sold to Chinese in a $2.4 billion takeover offer. And as far as my understanding goes, Extract Resources, the HUSAB mine had 500 million pounds of uranium under the ground. So what does that give us? That gives us almost $5 a pound in the ground of uranium, which is placed right next to Bannerman.
Yep.
And this is the thing with Bannerman as well. Like with other uranium companies, like your tenements are kind of spread out and they are kind of dispersed. If you look at Deep Yellow, for example, it's kind of dispersed. It's not just one neat mine that's huge. And why that's important is because when you look at the buyers, such as the Chinese buyers, I think they will look for the bigger mines, like these big deposits, rather than those that are spread out. Because obviously, then it's easy to mine out, right? Because you can just build one infrastructure. You can set up the processing plant, just nearby, and it just becomes a much easier process. So yeah, like, I mean, Andy, so here's the question, right? So if the Chinese bought it out, let's just go back to the uranium charts, right? So
sure.
If the Chinese bought out a 500 million pound, or bought out the Husab deposit for $5 per pound in the ground back in 2012, March 2012. So let's go back to this chart and show you where we were. Okay, so this is probably where the price of uranium was, around this point here. And we were in a severe bear market, right? I think this is one thing that we need to remember. And we had a lot more supply. So if you look at any of the supply deficit type of charts that are, that we've talked about even. So just going back, yeah. So basically, I think we were still supplying like 80 to 90% of world's needs. Whereas right now, as we've talked about, we might not be even supplying 40% of the world's needs.
Right.
So if they pay $5 in bear markets, and when no one was like piling in to get uranium back in 2011, like how much do you think the Chinese will be willing to pay right now at these prices when we're in a huge bull market and there is a clear supply deficit?
I would think that they would pay panic pricing. That's what I think. They're going to pay a larger percentage of whatever the spot price is in a bull market with no inventory.
Yeah.
That's and with deficits in the future as far as the eye can see. I think that they're going to pay a good premium for it. They're going to pay a very good premium. So maybe
I think so.
Maybe that last time they were paying like 10% of the spot price, or maybe a hair more. Maybe we get 25% or 20%, double that of whatever the spot price is.
Yeah.
So I don't know. That's just a guess. I don't know if that's going to work out that way. But I mean, if uranium's at $200, I'm just throwing out a number. If it's $200 and you pay 20% of it, that's $40, right?
Yeah,
it's $40 a pound.
And that means Bannerman will be a 40 bagger.
From here, yes.
But that's still
from here.
Yeah, and that's pretty conservative, isn't it? Right? If you think about it,
yes.
200-pound uranium. We've talked about in our original video how my low case was like 350 based on the based on the run up 20x from the lows to the highs. But then we've talked about gold to uranium ratios, and we've talked about the oil to Dow ratios and things like that, where we said, over $1,000 uranium per pound is possible.
Mm-hmm.
What people might,
One thing to also think about is the 2000s bull market could also be kind of like a first wave, and then the third wave's coming of the big one.
I think it is.
Yeah.
I think it is.
Yep. And if that's the third wave, you're going to see a big move, like massive.
Yeah.
For what's coming.
And that's right. I think that this could very well be the first move. And this is like a little handle here. If you look at it in a log chart, right? It's just like silver's playing out right now. So it could very well be. And so people might ask, why wouldn't they just go and pay $60 per pound or $200 per pound without the need to worry about production? But why did they do it in 2011? I'm thinking there was probably not enough uranium around for them to buy, which meant they couldn't find the 500 million pounds of uranium on spot market, which meant that they needed to go out to buy a miner. And I think supply shortage will be even greater this time. So if they wanted to get hands on 270 million pounds of uranium on spot, it's just not there. It's just not there.
Another setup
any bid that they put in might squeeze it so hard that you might just go to a couple of $1,000 in no time. So they're not going to do that.
Yeah, another thing that I think people also tend to forget is that the pricing over in Asia for natural gas is really expensive. And that's what uranium's competing against. So if they get into an energy crisis where they literally don't have the energy, they're going to say, I don't care what the price is, get it. Like it'll be a bidding war for whatever's left that's of high energy return on investment fuels. And at some point, and the way that I've structured my portfolio, maybe this is just craziness, I structured it on the possibility of not necessarily just management teams, but also the fact that the deposits themselves will have absolutely incredible value for anyone who wants to use it or buy it in the future, based off of the market conditions that are in the future of what I think is going to be a tighter energy market in general. So
no, 100%. And what better place to buy if the Chinese already have the Husab deposit and they're familiar with it? What better place to buy right next door, right? And you know what's crazy about this Bannerman? Like now this is getting a little bit crazy, but Bannerman's project, Itengo project, it's actually called Itengo 8 because the deposit has the shape of an 8. And do you know how much Chinese love number 8? I don't know if you know, Andy, but do you know how much the Chinese love number 8?
Tell me, Scott. Tell me.
Okay, so the Chinese, every time you see a car on the road with number plates like 888 at the end, I will bet you anything that it's Chinese. Like,
why do they like the number 8? Do you know?
Oh, you didn't know? Okay.
No, I don't.
So number 8 in China is like a lucky number.
It's infinity. So I mean, if you know.
Yeah, it's infinity, but that's not how they see it. So it's because like I think you pronounce it like ba or something like that. So that's how you pronounce number 8 in Chinese. But then it sounds similar to well off. Another word that sounds well off, which means Chinese when they buy anything, when they see like number 8 houses, for example, like that, they will pay a premium for it. When they see number 4s, because it's bad luck, they won't buy it. They won't touch it. So I'm just thinking if they had a choice in the medium project, because they're familiar with the jurisdiction, because you've already got an established mine there, they're gonna go for things with number 8 first. Like if you just had same deposits, let's say you've got like two totally same deposits alongside each other, and what was number 4 and what was number 8? I bet you anything they'll pay a premium for the number 8. And Itengo project is actually Itengo 8, right?
Yep, it is.
It's Itengo 8 project. I don't know if I don't know if Brendan named, I don't know who named it Itengo 8, but I think it's because the shape of it is like 8. I don't know if I can pull it up.
Well, it says it was 8
yeah,
MTPA right there. Maybe that's why they said Itengo 8.
Yeah. Oh, yeah. But anyway, I think this will attract the Chinese buyer even more. And same with Elevate, because it's like EL8.
Yep.
They will automatically, like it's just built into their culture that they will automatically look for things with number 8 in it. And yeah, I think it's gonna. And another thing with Brendan Munro is that he's just so well connected because he's obviously that part. He's a big, he has a big input into the nuclear association, the World Nuclear Association, which means he must be well connected, right?
Yep.
He's got the biggest presence of any CEOs, any uranium mining CEOs on Twitter. So he can definitely find, if there was a CEO that could find the buyer, I think it would be him, is what I'm trying to say.
Definitely.
So
definitely.
Yeah.
What other do you have any other companies that you really like besides Bannerman, Elevate, E92 Energy, and Baseload Energy? What are some other ones that you like, or is that it? Is your
I think they're my favorites. I think you've just gone through all my favorites. So I think at these prices, Bannerman is my favorite. So if you look at like ELA, it's run up a little bit. So it's potentially got a lot of upside in terms of your resource estimate, but based on their resource JOSC compliant resource estimate, you're still paying like $2 per pound in the ground right now. So you're relying on them to find a lot more than what they have. Whereas with Bannerman, it's a surer bet because you already have the 270 million pounds in the ground, and you're paying $1 per pound in the ground. And as I said, I think if the Chinese were to come in and buy Bannerman, if they paid $5 for it in 2011 during bear market, when uranium price was at 50, I think they could buy. I mean, if the uranium price is at 1,000 and they were paying 20%, that's 200x. I don't know. I'm not gonna. Who knows what they're gonna pay, right? I mean, if everyone's scrambling for uranium, because who knows what they're gonna pay? They could pay something ridiculous.
And it also depends on how high and how long it stays up there, which I think it could stay at a high level for a long period of time, only because there's no way to really bring uranium on very quickly. So you're gonna have this large squeeze window.
Yeah. And we've talked about this because let's say they pay $100 per pound for Bannerman. Like, it's not that much money. Like if you compare it to, I guess, the national security potential issue, and if you look at, like, I think it's 30 billion then market cap, if you around there, like, that's not a lot of money. Like, if you think about it in the scheme of things, for a nation and for the government to be paying that much money, it's not much money. And when you talk about the uranium as commodity itself, we've talked about how it's like 600 times cheaper or 700 times cheaper than oil. So, like, in terms of its cost, like it's immaterial for a nation or for large organizations in China. So,
I agree. And when you're building a bunch of nuclear power plants, you're going to look for fuel. So, I mean, that's
they will need to start stockpiling. They will need to start securing their supply. And I don't. They will be very insensitive to the prices of uranium, which makes me believe. I mean, because of its close proximity with the existing Husat mine, which is owned by the Chinese, because of the number 8, because of Brendan Monroe and how he knows the uranium market, how he's so well connected. I think Bannerman is, for me right now at these prices, it's my favorite. So I just had to. I was staring right in front of this beautiful opportunity, wondering, should I sell my silver or not? Because I've kind of set a rule for myself to never sell my physical silver. But I'm just staring at this opportunity going, okay, if my silver did really well over the next 2 years, maybe it will be like a 5x max. But when I'm staring at an opportunity with potentially over 100% return, like, for me, it was a no-brainer.
Well, you mean you're not 100%.
Over silver. Sorry, 100 times, 100x.
Yep.
Potentially, I don't know. I think it could
I think we could get a 10x easy out of it, and that's what I think. And then you could go much greater than that, obviously, if the uranium price were to go to much higher levels. So the way that I always viewed the companies is I always look for companies that they have pounds in the ground. We know it's there. And I don't necessarily want to take all the extra risk in the world if a company doesn't have it. This is just me talking. And I look at the dollars per pound in the ground, but it's the ones that I wanted to look for companies that could develop that dollars per pound in the ground to something much greater, or they could get bought out, or the CEO wanted to wait and kind of like they knew the market very well. Like, I don't want to go into say like a Paladin Energy or a Camco, because I think they're going to lock in prices far too low. So I don't want to almost be in the producers. I want to be in something that they can't really sign it very quickly, but yet they could come on and produce online in like a couple of years, or could potentially be they could potentially produce in a couple of years because people want to buy that. It's of great value. And then I want to be in all the companies that could potentially find or have great deposits that are located either close to the surface, that's easy to get, because if energy prices go up even further, then your costs would be cheaper to get it out of the ground. And then 100%. If you've got deposits with high concentrations that are really small, that's another one, not small, but yet concentrated together. Those are also ones that I wanted to get into, like fission uranium and next gen energy, because I'm not buying the company, I'm buying the deposit. So I'm like, when I look at like an energy short world and they're saying, look, we need to scramble, we need to get uranium. Like, what are the deposits? What are the best deposits that we could buy in the world? If you're a, you know, a country or something like that, they're going to be like, well, fission uranium, next gen energy, base load. If they find something really close to the surface, that would be absolutely incredible. And then all these African ones. So what I did, because the African ones are the cheapest per pound, is I just bought all of them. I didn't even I non-discriminately bought all of them because it's like, I want those deposits that are close and that they could get bought out and they would be incredibly valuable. And a lot of them are set up close to production, like Bannerman is, where somebody could buy it out and get it moving. So that's basically my strategy there. And I know a lot of them don't have revenue, but I don't necessarily care about that because previous bull markets have priced these things at ludicrous levels. So hopefully it plays out that way. And you know, I've got Encore Energy. That's my largest holding in America. I think that's, I don't know for a fact. I don't actually know what my largest for sure holding is. It's between, I've got 4 companies that I'm really loaded in. I've got Bannerman, I've got Deep Yellow, Encore Energy, and Baseload. And I don't know which one is actually my largest holding because they fluctuate. Some of them have gone up a lot. Bannerman was a 10 bagger for me at one point already, but it's pulled back from that high. And Encore Energy's done very well too. So those two were kind of racing. Deep Yellow's been a laggard and Baseload's about as up as much. It's a little bit more. It's up a little bit more than Deep Yellow is. And then Next Gen's doing okay and Fission's doing okay, but they're not my largest holdings.
I think I just want to talk, I think, going forward, because I think, you know, once we break the $70 mark in uranium spot prices, I think it can very quickly go. Like if you just look at the chart, like there's hardly, you've got very little resistance now.
What did when you were looking at the torque, what was Forces Metals? Forces, FOR.
So this one, with the American plays, they didn't run up that much during the last run. So you're probably looking at this period here.
What about that one before it, though? What about the one before?
Yeah, this one was huge because you're coming off like nothing. But I think I'm pretty sure Bannerman would have done something similar as well. The 770%.
What was Bannerman's from that November to?
So here we're looking at November to May. Okay.
Well, whatever the full move is, we can look.
Yeah, it's huge, right? Because you're looking at.
See, it highly depends on the time frame.
Yeah. Well, actually, yeah, it depends on the time frame. So 552%.
Because when I was looking at these, the ones that had the largest moves higher that I found, was, depending on your time frame, was Deep Yellow, because that one went from like nothing to a massive move before. Bannerman, Forces Metals, and Global Atomic and Encore Energy. And those are the ones I do have Global Atomic as well. What did Global Atomic do during that time frame? Because that one also had a massive run. That might be the biggest of them all. Was because that one had a really big run.
So we're looking at
in my account it did very well. I know that.
505% to here, 761 to here.
Yeah,
similar to Bannerman, I think.
They're all very close.
They're all very good. They're all very good. But I'm looking. I want to find the next. Or I want to find the one that will outperform in the next leg up of this bull market. And I think it will be Bannerman. For me, like it's just looking too good to kind of miss out on. Not financial advice, obviously, but.
No, I agree. They all look. I like all of them. So I just. What about Encore Energy? Or no, we already looked at that one, didn't we? Yeah, we did.
Yeah, we did.
Yep. So yeah, those are the ones that I'm in quite heavily.
Yeah.
And then I've got small amounts in some of the explorers. Now, what about like Azincourt? This one's been like squeezing up forever.
Okay.
AZZ, I think it's AZZ maybe, or something. Maybe it's not. What is it? AAZ, Azincourt, AAZ. Yep. But see how that one's like in one big squeeze mode?
Yeah, it is. Oh, it's looking really good. The chart looks beautiful. Yeah, that was a massive run up right there.
See that right there?
That's really squeezing up. That's
what about
as
that?
good as a chart. Look at this. This is what I see.
You know what I see.
So here, yeah, a whole lot of like support, and then resistance broke out, back test. Now coming back down, forming this round and ready to go. That looks really good, actually.
Yeah, it's a squeezer. It's a squeezer.
Yeah. Wow, and look at that.
Yeah, I know.
Nothing above. Yeah, looks really good. Looks really good, I've got to say.
Yeah, it was one that looked. It looks interesting. That's what I'll say.
Yes. Yeah. Looks very good. Looks very good.
I mean, yeah, I'm trying to think of what else, because a lot of people ask questions, and that one I don't think too many people talk about is Azincourt. And only if they could hit something, because I mean, if they hit something during the bull market, this thing it could go very. It's very cheap right now. What about? And not a lot of people talk about this. Anfield Energy. I think it's AEC if you want to know the ticker symbol.
AEC?
Yeah. On the TSX.
It's pretty much done nothing.
I know.
I mean, it's got a couple of resistance here, so yeah.
Mm-hmm.
I don't know. Do you know why it's lagging so much, Andy?
No, I don't. Is it just a laggard?
I haven't really looked I don't know. Is it an explorer? I don't even know what who they are.
It's an American company. Well, they're in America. They've got so many pounds in the ground. I can't remember the exact amount. They have a mill too, and they could produce. I can't remember the total pounds that they have though. Anfield Energy, yeah, probably get it.
Energy. Let's have a quick look. So this is my normal process when I look at any company. So I'll just go and build.
Yeah, that's all I do. I just go to their website and then look at their presentation.
Let's look at their market cap first. 55 mil.
Yep.
Rezo. Let's have a look.
We're doing a crash course on how to look up a company here.
That's exactly. This is exactly what I do. Where's the cash? We'll talk about cash. Must be quite low cash position.
They had their uranium there.
Yeah. So they've got 4.1 million pounds. That's hold on.
No, hold on. It was in one of those. I think it was down when you were scrolling. It was keep going down, maybe. I saw it somewhere. Right there, right there.
Here you go. Uranium project. Yeah, see, like it's very low resource, right? 1.1 mil, 4.1, 4.3. That's nothing.
What about on the right hand side?
I wouldn't be. Yeah, that's still low. 5.2, 2.3, 1, 11. That's really low.
So they've got maybe in total.
Yeah, but here's the thing, right? I don't like them spread out. So I think I've mentioned it just before around with Bannerman. The reason why I like it so much is because it's like in one neat spot.
Yeah.
Which means you only need to set up like one production, processing plant or something. Whereas with this, like I don't know what the infrastructure is going to be like. Like even before I read the rest of it, I'm immediately disinterested because of the low pounds in the ground that are dispersed. So yeah. Yeah, this is where I just put float. Like there's no need for me to go into any more detail than this, because I'm not interested. So this is how quickly I can go through companies, right? Because I just look at the chart. I look at if I like the chart. If I like the chart, I'll go into the company, and then there will be certain triggers that kind of put me off, and this will be one of it, which is like really low pounds in the ground.
Yep. Because I get questions
like,
on Anfield.
Yeah.
Another one.
Here's my answer to it anyway. I don't know what you think, but
no, yeah, I'm indifferent. I don't necessarily like or dislike it. I'm indifferent.
Yeah.
Yeah. What I'm trying to think of other ones that people always ask. I know a lot of people ask about Western Uranium Vanadium Corporation. I haven't really.
Western Uranium.
Yep. I've actually never looked at their. I can't remember if I looked at their presentation or not.
Okay. So Western Uranium.
Yeah, it's right there, that top one. Yeah.
Okay, so they're trading at 88 market cap, 88 mil.
Mm-hmm.
Let's go to their. Let's just go to their presentation.
We're testing your internet speed.
Yeah. Actually, my home internet's down, so I'm just hotspotting with my mobile today.
Oh, nice.
So you've got, I don't know, what's their cash position? I always look at cash because I don't like them diluting my shares. It's straight up I start buying. So doesn't have cash position, but let's see what they've got. So this is just background on nuclear. One thing that I don't want to see in an explorer, like that I absolutely don't like, is when I just see everything around uranium generally, and not the company itself and what they've done so far. Like some Athabasca uranium explorers, you'll just see it all talk about the uranium market generally, like this, like the production, demand, all that kind of stuff, and nothing on their tenements. So that's immediately a no for me when I see that. Okay, so yeah. Okay, so they've got 46 mil. Very low grade, but still decent, I guess, uranium in the pound. But yeah, so this is where I start thinking about. So this, for me, like if you actually want to make money, like I don't think this will be bought out. Like it will be low on the list of things to be bought out just because of relatively low pounds in the ground. So like when the Chinese and the Indians are coming in to buy, like they will start off with the larger tenements because that's when it will be worth it for them to buy these big mines over, say, the straight above ground uranium. So it's not likely to be bought out. It's lower on the list, definitely. And where is that? Like, where is this place? Hansan. So next thing I'll look at is.
It's right below, I think. It's in right where I live.
Oh, is it? Okay. So okay. So jurisdiction wise, it's not too bad because it's in the USA. Like it's pretty safe jurisdiction.
Mm-hmm.
But my question is this, right? So if I these are low grades as well. Like these are not high grades. So if I can get Bannerman for $1 per pound, right? Why would I get this? Because you're paying more than $1 per pound. You're in a jurisdiction potentially that's more expensive to set up infrastructure, human resources. All of that will be more expensive if you were to put it into production. It is less attractive to a Chinese buyer. So for me, like this, I wouldn't get it over Bannerman, if that makes sense.
No, it makes sense. I don't own it, so
yeah.
The chart doesn't.
That's how
I stopped at the chart, but a lot of people always ask about some of these that I don't know as much.
Yeah. So
about,
I don't know, maybe there is like a little bit of like gold if you read through it carefully, but there are so many companies to look through for me that if it doesn't like immediately shout out this is a buy, then I just move on to the next company. So for me, like I would move on from here because I know Bannerman is much better than this. So yeah, it's not worth looking at anymore,
Right.
But yeah, this is how I go about
Right.
selecting my companies. Yeah.
Yeah, I'm trying to think. What about, do you like fission uranium or no?
Fission uranium, I've got a little bit, but with the Athabasca like developer types, I'm not interested in buying any more of them just because. Oh, hold on, fission uranium. Yeah, just because that you're paying a lot more for the pounds in the ground. And the reason why I say that is, yeah, they probably do deserve a bit of premium, and it would have been a good play to buy into at the beginning of the bull market. But if you actually look at the premium, like Athabasca assets don't really get the type of premium that you would expect them to get. Because if you look at the most recent sale to an external buyer, I think one that I can think of is Heather Exploration that was sold to Rio Tinto.
Yeah, you're talking Rough
So
Rider.
that's, yeah, the Rough Rider deposit. So it was sold for 650 million. I think they had around so it was still sold for 650 million, around the same time that the Husab deposit was sold, I think, from memory, around 2011. And they had just over 60 million pounds of uranium under the ground. So that equates to around $10 per pound in the ground, right? Roughly. So you only got double what you got on Husab deposit. So a lot of these Athabasca plays right now are trading at what, $5 to $8 per pound in the ground. So
let me see. I have the thing here real quick. Or let me see what I have a valuation on it. It's at 4.8. 4.8.
Yeah, 4.8. Yeah, so $5. So let's say uranium goes. Let's say uranium. Yeah, sorry.
That's if they have 135 million pounds in the ground. They might have moved that one up. I don't remember.
Yeah. Okay. Yeah. So that's where I'm like, okay. So if Athabasca is going to get 20% of uranium price in a bull cycle, right? And Africa is going to get $10%. Then for me, like the leverage is so much stronger if you just do quick math.
Yeah. Yep.
If that makes sense. So I'll just maybe do a quick spreadsheet and show you, right? So let's say, okay, so right now you're trading at, so this is fission, was it? FCU. Okay, so let's say they're trading at $4.8 per pound, right? And you're talking about Bannerman, which is trading at 1, right? Let's say spot price of U goes to 200 200. And let's say Bannerman gets 10%, just based on your Husab discovery, right? Let's just say they get around 10%. So that's $20 per pound at 200 spot uranium price. And fission, say, gets 20%. Okay, that's 40 bucks. So your leverage, so if you just go 40 divided by the current market price of uranium, what the market's giving it, that's 8 times your money. Whereas with Bannerman, you're talking about obviously 20x. So for me, like the high grade plays right now does not seem attractive at current prices. Which is why I've just gone for the African play. It's safe jurisdiction as well. Like, I mean, with a lot of these Athabasca stuff, if they don't get taken over, they need to go into production. But you've got, as Kevin Bambra always mentions, you potentially have those indigenous like type of issues, which can slow down production as well. So
yeah, another thing that I like is a lot of the ones over in Africa are high cost producers versus some of these other ones that are lower cost. And everyone always trips over this. They always have questions. Shouldn't a low cost producer make more money than a high cost producer? My answer is no. They'll make more money. Yes.
Yeah.
They won't make more money for the shareholder. No. And
no.
Why is that, Scott? I mean, I know why. I can give my opinion, but why are high cost producers better?
Yeah, it's just like an options play, right? Because if it's out of money, you get pounds in the ground for dirt cheap, like you're doing with Bannerman. Like it's just like options play. So when you're out of money, you're paying dirt cheap prices, and then when you're in the money, suddenly you're getting rewarded like crazy. So if I just go, say for example, I don't know what the figures are exactly, but let's just say company A. We've got company A and company B. And let's say one's cost of production, and let's say company valued at $5 per pound right now, trading at, let's give them same market cap, right? So let's say 100 million market cap for both companies. And let's give them $5 per pound for this one. You're paying $5, so you've got
how many pounds?
How many pounds? Yep, 20 million pounds for this company, company A. And then you've got 100,000, so 100 million for company B, because you're paying $1 per pound, right? So let's just use this example. Oh. These are the pounds, right? Pounds in the ground.
Yep.
So let's say at their cost of production, let's say their cost of production is 30 for this, and for $30 per pound, and let's say this is $100 per pound, right? Yeah, of course, like until uranium prices go up to 100, company B is making nothing. But what happens when they start produce when the spot price of uranium goes up to 200? Let's say this is spot price. This is the leverage that you might get. So at 100, okay, let's say spot price at 200. Yeah, hold on. Now you need to go 200. Oops. 200 minus 30 multiplied by 20 mil. So that will be the net income stream that they might get from this deposit using this cost base. Whereas with this, this is what they get.
Yeah, so it's not, but when we're looking at this, it's not the actual total amount that you get by company A or company B. What we want to look at is the earnings per share difference from where we are today to where it could be in the future. And that multiple. So we're looking at the it's not even the pounds in the ground per se. It would be the when you're, so let's say the spot price is $60 a pound, and you're at the cost of production of 30. What's going to happen is they're going to be priced much higher because they are in the money using your scenario.
That's right.
And if we're at 60 and you're paying that premium, and it were to run to say 200, the problem is they already could potentially have earnings at that time. And your multiple from where you are today and where they could be isn't even close to the one that's out of the money at $60, because as you make more money, you're basically dividing by zero because they're not making any money.
That's right.
And that's what we want to do is we want to find companies that are, quote, out of the money, not making money, that will be in the money in a different market condition in the future.
So what
we get.
Let's say, this is what Andy is talking about. So basically, at current prices, you're making 30. So if the spot price was to go up to 120, let's say it doubles, what are you making? So you're making 120
90.
Minus
30, which is 90.
Which is 90. But that's from here, you've seen an increase of 3x in your earnings, right? Whereas with this company, let's say they make, let's say the all-in sustaining cost is 55 and the spot price is 60, you're only making 5. But then when it floats out to 120, all of a sudden you're making
65
per pound. And what that equates to is a 13-fold increase in that profit. So this is the leverage that you can get from the high cost producers. And that's why I think if you believe in the uranium thesis, and if you believe that uranium is going to go to much higher prices, this is where you just pile onto the high cost producers, because it will give you a lot more leverage than the low cost producers. And that's why I like Bannerman so much, and the other African plays.
Yeah, and what you're seeing in the charts is that calculation. Your DNA in the charts is basically showing you what's a high cost producer and what isn't. That's how they're correlated if you were to look. So when I was buying the oil companies at the bottom, I was buying high cost producers out of the money with large debt where they came close to bankruptcy. I saw that people were piling into it saying, okay, they're not going bankrupt. So I piled in as well. And that's how I got the leveraged move, was because shorts jumped in and pushed it to levels that weren't normal. We're talking literally 1 penny of their valuation from their all-time highs. They were valued at less than 1 penny. I came in, swooped in like the bad guy I am, because no one likes, taking an 80-90% loss. This dude comes in, looks at the chart, buys it all up at the bottom, and it starts riding it higher. Like, oh man, what is this guy doing? And the reason that they get within an inch of their life is because of the calculation we just did. Because they're out of the money, they're losing money, and if they have debt, that debt doesn't go away. So the likelihood of them going bankrupt could be very high. And that's where I start to come in and I say, okay, who's buying it? What's the commodity look like? Does the commodity have a good chart? Does the ratios, are they favorable and turning up? I look at all that stuff. And if it's all a go, that's where you risk your money, because the rewards could be massive.
For sure. No, I do exactly the same.
Yep. The good thing about uranium is a lot of them don't have a lot of debt. They really stayed away from the debt.
They're all cashed up.
They just dilute. They dilute. That's their way of raising money. The oil companies borrow, and then they hope that the oil price stays high enough where they don't go bankrupt. So that's the main difference that I see out of them. Anything else that you'd like to add about the uranium bull market at this time that you think might be good?
I think it's just on the verge of a breakout, and once it breaks out, I think we'll have the biggest leg up of this cycle. And I think we could just keep running without really looking back at the 200 moving average, as I said in my earlier video. So that's, I think, where we are at with uranium.
Do you think anything could stop this bull run?
I don't know. Like, people talk about nuclear accident potentially stopping it, and I think maybe it could. But like, I mean, realistically, could it? Is kind of what I'm wondering, because if there's energy shortage and everyone's like freezing to death, like, what's more important, a nuclear accident or like making sure that we've got enough power for heating and so on? So I don't know. I don't know if anything can really stop it. I think obviously if there was a nuclear accident, we'll have a huge sell-off, initial knee-jerk reaction, but I don't know if it will entirely stop this bull run.
Mm-hmm. So you don't think there's much? I don't know. I don't know what can stop half this stuff, because the way that I view it, with all the money coming into this system, with energy shortages, I mean, I look at oil and gas and I'm just like in America, because everywhere else is so expensive, I'm like, I don't know what can stop this from going up, at least somewhat, not to the same level as maybe Europe and them, but at least up to a level that might be higher than where we're at. And what most people forget is that everyone's looking at the numerator. They're all looking at supply and demand, supply, demand. I'm like, guys, that's not even the biggest movement of this. It's the denominator of the dollar. When that money rotates over and all of that stuff starts getting scared, that's the big move. The big move doesn't come from the supply demand imbalance. That just directs money into uranium when the money starts to move. Because when the money starts to move, it says, where's the best place to go? Because that's basically what I do.
That's exactly right. That's right.
Yeah. So they're gonna be all huddled here with like trillions of dollars. They're gonna be like, oh, this one looks really good. They're all screwed up, and then it just goes, and then it's like you can't absorb it at all. So the price has to be the
100%.
factor.
It's like the toilet papers, right?
Yeah.
Well, you never really pay attention to it. Obviously, there will be a need for your toilet papers, but when everyone starts hoarding it and everyone starts stockpiling it, which is exactly what the countries will do, right? Because the governments or these utility users the nuclear fuel users will start hoarding them in once everyone else around them is starting to hoard them in, because then they're kind of like in the fear of missing out. So that's exactly when the big money comes in all at once.
What could stop it for the investor would be nationalization.
Yeah,
that could stop it. Countries nationalizing assets, taxes could slow it down if they were to tax something. That's about all I could think of.
Yeah, pretty unlikely.
And that's where, that's why I chose Namibia. And I think the biggest risk is in America and Canada. That's almost the bigger risks. Like Namibia, I thought was actually a lower risk than them, because they actually want the money.
They do. Like it's from Namibia, like it's such an important sector for Namibia, like the uranium mines over there. So like I think I agree. That's why I think some of my favorite plays. I mean, I've got some in Athabasca, but some of my favorite plays right now, BMN, Bannerman, and Elevate, they're in Namibia. So
yep,
I agree.
I agree. That's all I've got. I don't know if you have any other.
No, that's all I've got. That's all I've got.
No closing statements.
Yeah, just closing statement. Thank you. So I just wanted to share a verse from the Bible. So it's Matthew 6:26. It says, "Look at the birds of the air, for they neither sow nor reap, nor gather into barns, yet your heavenly Father feeds them. Are you not of more value than they?" Is what it says. So basically, I mean, God, when you look at the Bible, he obviously created us in his image, and he cares about us more than all the animals out there. And he gave all the animals under our control. But what this is basically saying is, like, even if you look at the birds in the sky, like they get fed. They don't really have to build barns or anything like that. So it's saying, you'll be looked after. You don't really need to worry about it. Rely on God, and just be content.
All right, that's good. Well, that's what we've got for today. That's our uranium piece. And awesome. Thanks for coming on, Scott. I really appreciate it. Taking your time.
Thank you.
And it's been fun. Again, you can reach Scott on Twitter at @U_AG_. You can partake in these discussions if you give me a thumbs up and subscribe to the channel, because we post these things up all the time. And if you want to check out my website, it's below. Click the link and you can sign up, and we talk about all these different companies, and I dive into some of them on the company in different sectors. All right. I appreciate it. Thanks for coming on.
Awesome. Thank you, Andy.
Yep. We'll catch you next time. This is Finding Value.
Thank you.